Welcome to World Finance Brief. Today, we're going to jump right in and dissect the anatomy of a truly wild market crash. We're talking about a day when gold and silver didn't just fall, they absolutely plummeted. Let's get right into it.
So let's set the scene. It was Friday, January 30th, and the precious metals market, well, it didn't just fall, it cratered. I mean, we are talking about a nosedive of historic proportions that sent massive shockwaves through the entire financial world.
Okay, to really wrap your head around the scale of this, get a load of this number. Silver futures, they collapsed by a staggering 31.4%. That wasn't just a bad day, That was the single worst day for silver in over 40 years. We're talking all the way back to March of 1980. Just incredible.
And what about gold? The traditional safe haven? Well, on this day, it offered no safety at all. It got hammered down 11.4%. Just a massive wave of selling that hit the market and caught pretty much everyone completely off guard.
So, you've got to be asking, right? What on earth could trigger a panic of this magnitude? You'd probably expect some super complex economic report or maybe a major geopolitical crisis. But the answer? Well, it was surprisingly simple. And it all kicked off with just a single announcement from the White House.
And here it is. The spark that lit the whole fire was the nomination of one Kevin Warsh to be the next chair of the Federal Reserve. Now, normally this is kind of a procedural thing, right? But this specific choice, it sent an immediate and incredibly powerful signal to the markets.
Okay, so to really get why the market freaked out, you have to understand these two little words, dovish and hawkish. See, the financial world pretty much runs on expectations, and the market was betting big on a dovish Fed. That's someone who'd likely keep interest rates low. But Warsh, he's seen as a hawk, someone who's going to raise rates and strengthen the dollar. And for precious metals, a strong dollar is like kryptonite.
And that right there is the heart of it. The entire massive rally in gold and silver was built on this one big idea, that the dollar was going to get weaker. It's what traders call a debasement trade. Well, the Warsh nomination just completely shattered that narrative. And you know what happens when the fundamental reason for a trade just vanishes? Yep, everyone runs for the exit at the exact same time.
But hold on, it gets more complicated. This single piece of news didn't happen in a vacuum, right? It actually created this really dangerous feedback loop, basically a perfect storm that turned what should have been a significant drop into an absolutely catastrophic crash.
So you had three things happen almost all at once. First, the dollar shoots up on the Warsh news. Second, you've got all these investors sitting on huge gains and they rush to sell and lock in those profits. And then the third thing, the most dangerous part of it all, forced selling and margin calls start to kick in.
And yeah, equity strategist Matt Millay absolutely nails it with this quote. See, a lot of traders, especially the short-term guys, were using borrowed money, we're talking leverage, to bet big on silver. So when the price suddenly fell off a cliff, their brokers forced them to sell to cover their losses. And that forced selling just creates more selling pressure, which pushes prices even lower, which, you guessed it, triggers even more margin calls. It's just a classic vicious cycle.
Now, to really fully appreciate just how severe this crash was, you have to look at the absolutely meteoric rise that came right before it. Because, you know what they say, the higher you climb, the harder you fall. The stage was seriously set for a disaster.
I mean, just look at these numbers. This shows you how extreme the whole situation had become. In 2025 alone, silver had soared an incredible 135%. Gold was up 66%. Come on, those aren't just gains. Those are bubble-like profits. And that creates this super fragile environment where basically everyone is on a hair trigger, just ready to sell at the very first sign of trouble.
And again, this incredible rally wasn't just happening for no reason. It was being fueled by some very real-world concerns. You had volatility in other markets, a weakening US dollar, bubbling geopolitical tensions, and even this growing concern that the Federal Reserve was losing its independence. All of these things together pushed investors into what they thought was the safety of precious metals.
And this quote here from Katie Stoves just perfectly sums up the danger, doesn't it? The trade into gold and silver had become what we call crowded. It's like when everyone rushes to the same side of a boat. It really doesn't take much to flip the whole thing over. And that's what happened. The unwinding of these crowded positions, it wasn't an orderly exit, it was a stampede.
Okay, so after a brutal, historic crash like this one, the million-dollar question is, what's next?
Was this just a blip on the radar, or was it a really fundamental shift? And believe me, this is where the debate among the experts starts to really heat up.
So on one side of the argument, you have people like Tony Meadows. The thinking here is that the long-term story for precious metals is actually still intact. Basically, the idea is that all that geopolitical uncertainty that fueled the rally in the first place, it's not going away. And it's going to keep pushing foreign central banks to diversify away from the US dollar and into assets like gold.
Which of course brings us to the big central question we really want to leave you with. I mean, this crash showed us just how incredibly volatile these assets can be. So, here it is. Does that traditional idea of gold and silver being a safe haven actually still hold up in today's super fast-moving economy?
So what's your take? Was this just a temporary washout, fueled by too much leverage? Or has something fundamentally changed about the role these metals play in a modern portfolio? We really want to hear from you. Drop your thoughts in the comments below. Let us know what you think.
And hey, if you found this breakdown valuable and you want to keep understanding the big forces that are shaping our financial world, make sure you hit that subscribe button for more World Finance Briefs.
Thanks for watching.